It's so crazy because like the college football playoffs, the reason why they were created was to eliminate blowout wins for the national championship game like this.
Yeah.
I can't believe how bad TCU was today. That was
I'm
like beyond embarrassed for them.
I don't think they were bad. Like
They lost to K-State, you know, like you lose to K-State.
Yeah, but that was a bad. That they looked bad. This one you
lose to K-State. Like, you're not beating Georgia, that's for sure.
No, because I think it was. Even then, in their opening offensive drive, when they had that when their opening play is a false start, and they get walked back for it. It's just like TCU. I've got. You can't. Georgia doesn't need the help.
No,
Georgia's gonna bring some damage your way, some hurt your way, without you hurting yourself.
Did you know that over $5 trillion exchanges hands on a daily basis? That's an average of over $220 billion an hour. Now, how does this much money move every single day, and why does it move the way it does? Here on Drunkenomics, two bartenders who also happen to be students at the University of Nebraska Graduate School of Business are going to sit down and drink to the global economy and try and translate it into English. So sit back, relax, pour yourself a stiff one, and have a drink with us to the comedy that is the global economy. And welcome back to yet another episode, yet another presentation of Drunkenomics. This is the drinking podcast with an economics problem. So glad you all can join us. Hopefully you have a stiff one in front of you, unless of course you're about to drive somewhere. Then in that case, wait, get to where you're going first, and then
absolutely wait till you get where you're going.
Yeah, that's the drunkenomical thing to do. And speaking of drunkenomical, I hate to say this. Actually, I don't really hate to say that. It actually brings me a lot of joy to say this, but I am the less gracious host once again this week because of an off-mic bet that we placed.
We did. We placed it. At 6:22 Central Time.
3 hours ago, maybe. Yeah, I was at the gym. You texted me about the whole national championship game. I was like, oh man, I forgot that was happening. So I was kind of watching it at the gym, and then I was like, okay, what do you think? How much do you think Georgia's going to win by? I went the under on 14.5. You went the over on 14.5. So therefore, you are more gracious. Congratulations. And your name is once again what?
It remains James Goldwater.
Still cool. Awesome.
Great. MGH.
Yeah, the MGH, which makes me.
But of course, Aaron Wong, right?
Something like that, you know. I think that's the name I have to live with.
No, LGH is the name you have to live with. Aaron Wong is the name your parents gave you.
Yeah, that's the one was bestowed upon me. That was the one that my loving parents, they handle, as the Big Lebowski would say, or Sam Elliott in the Big Lebowski would say, the handle that his loving parents gave him. But yeah, seriously, welcome back. I guess if you want more content, more Drunkenomical content, you can always check us out on social media. That's at Drunkenomical, DRUNKENOMICAL, on Instagram, Facebook, and of course Twitter. While supplies last.
Separately though, but separately on Twitter. Yeah,
separately, of course, totally. Yeah.
Can't have social media linked. Remember, guys.
Yeah, because that was the reason why Twitter was falling apart to begin with.
Also, just remember, if you go to our Twitter and it's not there, I guess Elon was listening when I called him out.
You know what? If he was listening
last week, the first week of the year,
I would honestly take it as a badge of honor if he actually did listen to Drunkenomics.
Here's what I'll say. Just despite everything I've ever said, Elon, if you're out there listening and you find out about it and you want to come on, you're in like Flint.
Please come on. Yeah, that'd be awesome.
Yeah, we'll host you.
But anyways, find us there. And then, of course, somewhere on there on the pages, you can find the link to our Discord. Free to all. It's just, got a lot of great channels in there, including fill and kill stuff. Speaking of filling and killing, I have this Shiner Trail Ale. That's the beer that I'm drinking right now. It is so not appetizing for me that I went ahead and opened another one.
So here's what I'll say for all my people out there. I found a way that makes Fireball a way that I will happily drink Fireball.
Ew.
Hang on, wait.
That sounds.
I've been adding it to like Christmassy ciders.
Can you give me a second? I just gotta go.
No, but seriously, no. It spikes the cider. It brings some cinnamon. It kind of wakes it up, and then it gives it a kick, and it brings it's weird to say because I find Fireball very sweet, but it brings down like the cloyingness that like both of them. The dryness of cider offsets the sweetness of the Fireball, and thus I can do that.
Dude, Fireball I don't know. I haven't found anything that it goes well with. I haven't been able to concoct a cocktail and drink it afterwards.
No, you know one thing it goes great with golf.
Yeah, if you like three putting, if that's your thing, then shoot fireball right before you have a lag putt. That you will.
It's Saturday morning, Aaron. But as Thomas Crown would say, it's Saturday morning. What the hell else we got to do?
Yeah. That's definite. Thomas Crown is the definition of a bored human being. If you haven't seen the Thomas Crown Affair,
either one,
but
the fashion,
either one, they're both
fashion
great.
in both is really good.
I like the classic one better, just because I think Steve McQueen is the coolest dude ever.
The original Chestnut Checkers, the original.
Yes,
don't brag, just say.
Yeah. So, and speaking of which, there's plenty of chess in that movie too. But yeah. With that said, seriously, so glad you all can join us. I guess
absolutely.
What should we talk about first thing? Should we start talking about? I guess I did see something in our general chat. Apparently, I said last week that Google hasn't announced payoffs or layoffs.
I was about to say we have to do that correction for Panson.
Yeah, so dude, thanks for the catch.
Who got us?
Yeah, thanks for the catch. I was drinking, so maybe I said something that I didn't read or whatever. Maybe I said something I didn't mean or got companies' names confused or whatever it was. So thanks for the catch.
Goldman did announce 3,200 in the immediate future.
Yeah,
so that's not insubstantial.
Yeah, so that's what I'm saying. Like that's what I've been saying for the longest time. Like I think the Fed is really taking a look at the labor markets. I think they need to see some sort of contraction there. And we have seen a contraction, don't get me wrong, but
we've seen some contractionary evidence, right? Because it was 209,000 first-time unemployment filings.
Right. That was the last week of the year, right? Or was that last week?
But that was last week of the year, but at the same time as we saw like really huge December hirings as well.
Yeah.
So it's like what?
Yeah.
All right. So we're seeing contraction some places. We're seeing expansion, maybe seasonally only.
Yeah.
Other places.
Yeah, but what I'm saying is like if you just were blindfolded for a few years and then you remove the blindfold and you looked at the job market now, right, not knowing historical context or anything, and you just looked at the job markets. The only thing you'd be like, wow, that sucks, is the labor force participation, right? It's like it's under 63%. So you'd look at that and be like, okay, that kind of sucks, but job openings, fantastic.
Well, you'd certainly be confused as to why labor participation is so low, given the number of openings and the increase in wages. You'd be like,
exactly. And then
what?
Yeah, and then the unemployment rate isn't like it's rising, but it's not like, oh my god, that's everybody buy swaps or whatever it is, right? Like it's not.
But then you'd be looking forward to Thursday because obviously CPI numbers are this Thursday, but this is a huge data week for the economy.
CPI is giving
kind of across the board.
Yeah. Speaking of a CPI, let's do a bet real quick, right?
Sweet.
For who is more gracious next week, because we'll find out, right? Today is Monday, the 9th, January 9th.
We want to take some pressure off the VIX because it's the beginning of the year.
Yeah,
and there's always just some wild buying and selling.
Yeah, I mean,
we want to take the pressure off the VIX till it gets its feet under it.
Yeah, volatility has a lot of soul searching to do. We still need a lot of college football coaches and NFL coaches that just got fired, including my own Cliff Kingsbury just got fired. Maybe he'll do some day trading the next couple of days. Maybe that'll drive the VIX up.
or like Scott Frost, our most recent head coach at Nebraska. And,
well,
he's moved to your neck of the woods now.
He's got a big $7 million house in Scottsdale. Is he
on your street now, Aaron, or just in your neighborhood?
Yeah, I wish, man. $7 million.
Are we not there yet?
No, I'm not quite there, man. I got a charter. I got to try to get a charter. But yeah, dude. I mean, I don't know. The VIX is a lot of soul searching to do. So CPI, I think. I don't know what the expectation was. I think I saw 6.6, but I could be off.
I seem to recall it was mid-6.
Yeah, and the last print came in at what, 7.10?
7.1?
Yeah.
Yeah, 7.1 when they were expecting 7, higher than that. And so people were like, woo!
Yeah. So it's I don't know.
Right. So I'll like it. I'll use my football analogy again. The people who were celebrating the inflation print last time are the people that are sitting here right now, are all the TCU fans right now going, it could have been worse. It's like, really?
Well,
because you scored 7.
Yeah, you just
the closest the game was when no one had scored.
Literally, yeah. There were no lead changes. So
there was lead. Yeah, it wasn't necessarily lead change, but it was lead creation,
and then just exponential growth after that. But yeah, so 6.9. Let's do 6.9%. Why not? 6.9%. Nice, right?
Nice.
Isn't it nice?
Well, it's weird because with inflation, it's like 7.4 is now that number. So it's like.
Yeah.
Okay.
I don't know, but
6.9?
okay. But the wager. The wager. I'm saying under.
I think it's going to be under. I think expectations are 6.6, but I mean, would it behoove the economy to blow it to above 7? I mean,
yeah, I'll take the opposite side of that without a doubt. I've never known a company to lower its prices when it doesn't have to.
Okay, exactly. So I was going to ask what your catalyst was, and there you go. That's a really good catalyst for it coming in.
Well,
that's
why
6.9.
I mean, we were looking at the benchmark CPI numbers last year, but like a few months ago, a few weeks ago, and
beginning of
we
December,
saw that like aside from what was it, beef and veal, meat prices have been through the roof, and if we looked at meat packing, that makes sense.
Yeah.
Meat packing prices are, they're more efficient now than ever, but the meat packing firms are showing substantially better profits. So they're not selling more meat. It's just they're selling it for more money. So
yeah. Well,
I see that continuing until it can't.
Yeah, exactly. And this is the thing too, is like, to support your point as well. I mean, apparently if anybody has been on FinTwit, I love FinTwit. FinTwit is like the most entertaining source of thing out there. I don't know. Like it's so fascinating. I love financial Twitter.
There's some great memes.
Yeah. Speaking of Druckonomics is there too, but
what I'll say is this, and this, I don't know if we got this in there earlier, but nothing we talk about on Twitter, nothing we talk about here is financial advice or the views of our respective employers. These are just our opinions.
Yeah, exactly.
And that goes for everything we've already said this episode as well. So just really quickly wanted to get that out just so we don't forget.
Yeah, exactly.
What were you saying? So price of eggs.
No, well, thanks for doing that. Yeah, so price of eggs. I mean, I don't know. I don't know if I wasn't paying attention to the news at all this weekend, but I think some report came out and everybody was tweeting about it. They were like, this is not Bitcoin. This is not a meme stock. This is not the price of oil. This is omelets. This is eggs. Yeah. And then like there's so many memes of like, someone in an egg warehouse, and it's like a picture of a guy and a girl. And it's like,
take me somewhere.
It's like,
take me somewhere
expensive. And it's like a guy and a girl like just in
a
warehouse
full of eggs.
Dude, the internet is undefeated.
Where's the lie?
It's so funny. But yeah, I mean, so I think to your point, we're seeing egg prices go up. I mean, everybody buys eggs. I was at the grocery store on Sunday. I looked in the egg section, a dozen of eggs, $9.
Oh man, it was like $7 the other day, and I was like $6.99 the other day, and I was like, So I bought the 24. I bought the 24, like the shelf. You know what I mean, like the flat box.
Yeah.
Just because it's like, okay, you've got that many, and it's like, okay,
yeah,
whatever.
I mean,
I
eat eggs like they're going out of style. So like.
Yeah. Well, they are.
They literally are.
But they're priced like it.
Yeah. So there's one like, a lot of grocery stores are doing like, limit one per customer. I've been hearing that a lot.
Mm-hmm.
And then I've also been seeing like, when I was at the grocery store, I saw, eggs were $9 for a dozen.
Can I ask you a stupid question, Aaron? Are eggs the new toilet paper in 2020?
Well, animal spirits. I think you're onto something here, James. I think.
Oh, I regret nothing.
That's how he died.
How he lived, telling bad jokes.
Yeah, that'll be a eulogy from me.
I just found I did just find a meme, and I'm sending it to you right now. It's
okay.
It combines two of my favorite things: financial news and King of the Hill.
Okay. Well, as it's coming through,
and I may have to tweet it in a minute.
No, yeah, absolutely. Feel free, man. But when I was at the grocery store too, like there weren't very many eggs on the shelves, even at like like how we mentioned before.
Well, no, it's because you can't put those little like tags on them that you like wrap around like expensive liquor. Like you can't there's no like cap, like there's no bottle cap thing to set them off when they go through the
so maybe people
through
just,
the gate,
maybe people are putting it in
the sensors.
Maybe they're just like getting a Drunkonomics hitting. They're just stuffing the pouch with eggs, and then
it's possible. I'm not. I would strongly not recommend that.
I would absolutely not recommend that too. That's not a good idea. That is against the law.
Half of it was a great idea, which is wearing Drunkonomics hoodie.
That was the best idea. Yes, exactly.
Other half not so great.
Exactly. Yeah. Don't do that. But I'm just saying, I wouldn't leave out
it's possible.
I wouldn't leave out that that's happening, right?
I mean, here's what I'll say. In keeping with my hatred for Florida State and the history of their football players,
it's
entirely possible that Florida State football players would wear their hoodie to the grocery store and put eggs there now that they're more expensive than king crab legs.
The crab legs, yes. No, that's your favorite football player. Their favorite Heisman Trophy winner ever was King Krabs. But yeah, so to your point, I do think possibly inflation might come in above 6.9, but I'll say what I'm seeing, we have PMI data coming in, or it's the ISM PMI data coming in.
Yeah, we had the ISM data.
Yeah, which is PMI. What does that read? Essentially, just manufacturing sentiment, right?
Yeah, price manufacturing index, and then ISM is the the industry of supply chain managers or whatever.
Yeah.
It's but they both give indicators of manufacturing or of
Yeah.
output, essentially.
Yeah. And
I
the
know-
benchmark rate is like 50, right?
50 is that delimiter between growth and shrink, between increase and
Yeah.
decrease, right? So if it's 50, you've either increased or decreased. If it's above 50, you're seeing growth. If it's below 50, you're seeing
Some sort of shrinkage, right? Like,
decrease in
yeah,
production.
contraction, yeah.
And I know ISM was saying 48.5, 48.4, something like that.
I think
They were
48.4
saying,
was what I
so,
saw. It was the Barron's article that I saw.
So a decrease, a not insubstantial decrease in production
Yeah.
from last year. So
Yeah, so I think stuff like that, and I think used car prices and major appliances and all those things within the basket of goods of CPI. I think all those things are going to pull the CPI index down for over the month of December. So that's the reason why I think it's going to be below 6.9%, 50 basis points. I'm not even going to. I mean, that's still
let's ignore that.
historically a bigger rate hike than normal, but I don't think it's significant anymore. I think everybody's already geared up for it. So
yeah. Oh, we did get a question. And I know I spoke to it in the Discord, and I don't know but the question was essentially like,
cool.
has the QT rate changed at all?
No.
Or have we seen the rate change? And
no,
and they said it was about what was it, like 90 billion or something in
95 billion a month.
And I said, well, it went from 90 in August to in August it went from about 92, 95. So did it change? No, it hasn't since then.
No, yeah.
And then is that having a major impact? Is the quantitative tightening having a major impact on central banks or on banking in general? Well, my response is is slightly more nuanced than I think maybe I let on there, which is to say, like, because they also said you guys talk about the interest rate a lot, and I'm like, well, yeah, because the interest rate is meant to dissuade demand for money, whereas quantitative easing, quantitative tightening is meant to affect the supply.
Yeah.
Right. So now we're seeing a point where we're trying to decrease demand and we're trying to decrease supply, but they're not really trying to decrease supply in a meaningful way compared to the way they were increasing supply 2 years ago.
Well, actually, what they're doing is they're decreasing supply of money, but what they're doing is they're increasing supply, unfortunately, of bonds, right?
Yeah.
This is the thing about the Federal Reserve, and I don't know. Let's just, while we're at it, throw in all the pension plans out there in the U.S., right? Like all these different pension plans that are sitting on all these different government bonds, they're sitting on all these CMOs and ABSs and MBSs. If they did a mark to market, and I'm sure at some point they probably have to, just because investors are going to be like, hey, what's our ROI over the last 2 years? If they did a mark to market on these
perspective,
yeah,
I can say there's actually So if you're not expecting to necessarily be manipulating these things for a while, you don't have to. Now, if you're a financial institution, you generally have to keep yours up to date. So you have to be like, yeah, this is the increase and the decrease. You have to keep accurate representations of like what any securities are worth on your books. Now with bonds and things like that, it's generally speaking, from an accounting perspective, you could say, okay, I don't have to change the value on it until it becomes current, right? So when it goes from being a long-term asset to
less than 1 year, right?
Something I expect to, so a year essentially. Once it's a year away from maturity, is when you'd pull it to your side and you'd start updating expectations, because it's like, well, within this calendar year, so i.e. on this year's books, or essentially this tax year's books, we expect to realize whatever this is.
Yeah. I mean, I guess the only other way you have to do mark to market too is if you're going to sell it, right? So if you have a realized gain or realized loss, right? So
as it becomes a real transaction, right? So it's I'm actually
like at
we're
that
moving
point,
this now. It becomes current, and then you have to as it's realized, you have to also recognize any gain or loss.
Yeah, but at that point, it wouldn't be a mark to market; it'd just be a transaction, right? Like I bought it for this,
it would be,
and I sold it for a loss, right?
Yeah, you'd be marking it to the market, but you'd be creating the market at the moment you're marking it. So it doesn't.
Yeah,
it's not like Enron, right? So because like Enron had mark to market, which was essentially they were allowed to book in a calendar year that they recognized something that might not be realized for years.
The future cash flows of a project that wasn't going to generate cash flows until 10 years from now. Yeah, so
but they could recognize all that today. And so
exactly. But like the thing is, like, so if the Fed, they're sitting on, like I said, $9 trillion worth of these securities, right? Bonds, mortgage-backed securities, right? Which mortgage-backed securities are just, remember what happened in 2008? It was a bunch of mortgage-backed securities tranched out
everywhere.
Right now, like in a rising interest rate environment, those mortgage-backed securities and mortgage obligations are seriously losing a ton of value.
They lose a lot of value. Yeah.
Yeah, they're losing a ton of value because
if they're paying at a much lower interest rate than
what I'm trying to say is like if everybody did a mark to market because interest rates have risen so much, like the thing is like a lot of pension funds, and a lot of like retirement accounts and people that run retirement accounts and financial advisors, like if you look at like the just like kind of to give everybody like a good foundation of like how much the bond markets have been crushed with the rising interest rate environment. The 10-year US bond was down about, I think, 11.2% last year. That's how much the bond itself, like the value of the bond, the yields went up, which means the value of the bond went down, right?
Absolutely.
So,
but that's because if we're looking at 10-year bonds from December of 2022, they're going to show a much better interest rate than the bonds from December of 2018.
Exactly.
And of course they will. Of course they will.
Yeah.
Just because it's
exactly.
like,
so that's your risk-free security that is down 10% or 11% or whatever it was, right? So I think I think with that said, the VIX, the markets, they have a lot of soul searching to do because like how are you going to discount this year to this kind of interest rate, this rising interest rate environment?
Well, especially when the vast majority of you think there's and maybe rightly so, that there's a recession looming. That there's a major recession looming.
Yeah.
So
I don't disagree with that, and that's also why I think inflation might be below 6.9%. So see how this somehow came full circle. I don't know how it did.
Full circle.
Yeah. But somehow I think inflation could come back down to under 6.9%. Maybe it exceeds expectations and comes in below 6.6%. I'm not making that the wager, but if under 6.9, if under 69, I'm more gracious next week, and you are less gracious, and vice versa.
Less gracious, and I'll take it. So if I'm wrong, but I don't think I am.
There's the wager. There's a long-winded answer about MBS is rolling off the balance sheet. Hope, dude. And speaking of which, dude, hope that answers your question, man. I just think QT is just gonna be. I think it's gonna be a disaster because I think they're gonna realize once they start rolling off QT. To answer your question, $95 billion a month. They're going to start doing like a mark to market and be like, okay, we need to sell more bonds than we think we did, because once we actually figure out what the price of these mortgage-backed securities are in this rising interest rate environment, like nobody's going to be willing to pay what we think they're willing to pay, just because why would they?
Yeah.
Like these mortgage-backed securities are fixed rates. I don't know how they're tranched. Maybe they're tranched with some sort of floater or inverse floater. But like for the most part, these are fixed rate, no credit risk agency mortgage-backed securities that once they roll off the balance sheet, once they do some sort of mark to market, people are going to be like, oh my God, well, I'm buying this for at least 9% less than we sold it to you for originally, because that's the risk we see.
Yeah, no, it's part of what we're going to be seeing in the future.
I guess maybe it's all extension risk, but yeah. Well, but anyways, what? Sorry.
Yeah. No, the other one is like, I guess there's only one more thing in the news that I really looked at that I was like, wow, that's kind of, this is, I mean, one, I think it's stupid, and two, it's not going to do anything. It's not going to go anywhere, to my knowledge.
Probably not.
It can't go anywhere. But a certain party finally took control of the House after 15 ballots, 14 of which were dumb.
Dude, okay.
I apparently can't count.
I have the ultimate dad joke for you for this.
Okay.
Sorry, it's a real economics dad joke, and you're gonna hate me for this. Like you're. Like,
no, I'm in. I'm in to win it.
You might reach through the camera and kill me for this. But anyways, do you want to know why the real estate market has crashed so hard in the last couple of days?
I don't know how the punchline works, but I think I know what the punchline is.
Why?
Go ahead.
It's because the speaker.
Something about the speaker.
It's because the speaker had no house.
Yeah.
Oh no! Sorry. It's
the
because
house had no speakers.
That's what it is. Dang it! Yeah. I can't believe I butchered it.
I was like, because there was no speaker in the house.
No, dude.
I was like, I don't know, but
yeah,
dude.
No,
there finally is one.
So
here's what I'll strongly recommend.
Yeah.
I'll strongly recommend turn on closed captioning, mute the sound, do this at your own risk.
If you want to watch it in black and white, it might be better for your eyes.
To be fair, I would have said to do that starting 20 years ago too, but
no, fair enough. Yeah, but we finally did get Kevin McCarthy the gavel. I don't know. Are you going to talk like, I guess maybe the House Republicans?
Yeah. So what they're saying. Well, no. So there's two things. So if you were looking for any kind of political stability, you're not going to find it, especially with the rules package. So the rules package that will govern this House, this version of the House, says that a single member of the House can call at any time to remove the speaker. A single member. So there's 434 people who can call. Well, no, there's 435 people that can call to remove Kevin McCarthy. I guess he could do it himself without resigning. It's just easier to resign, I think.
In that case, yeah. If it's going to get to that level, yeah.
Yeah, if it goes there, you can
make
definitely
it easy
get
yourself,
out. Yeah. But the first thing they did when they passed, so we've got, like I said, there's going to be a debt ceiling fight in September, which will be very interesting to see how that plays out. And then
that's September's problem. Whatever.
It absolutely is. But as of today, they decided that they were gonna pass a bill that would rescind funding for the 87,000 IRS agents who still haven't been hired, but they intend to hire in the near future.
Yeah.
Despite the fact that the Office of Management and Budget, so OMB, has said that this will lead to an increase in the deficit if they do that. So
this is the thing. Like, I think you're absolutely right. Like, I think not giving the IRS the funding that they need. Because like, what kind of technology are they dealing with in the IRS building?
Well, this is also the same party that will say we don't need new tax law. We need to enforce the tax law that's already on the books. And it's like, well, that's great, but I mean, you need people to do that.
You need manpower.
And if you're anyone who's had an issue with the IRS or any state revenue agency ever, one of the things that's kind of critical is that if you call to try and resolve your issue, you'd really like someone to answer the phone. And when they can't even answer the phone, you have a problem, right? So it's like, I need to call and talk to you about the issue, and you aren't able to answer the phone. So you don't have enough staff to answer the phone and get back to me in a timely fashion. So this whole like, we don't want to fund it. Well, one, you passed a bill to strip funding that's already been approved and signed into law. So it's not going to happen. But two, when you also the party that says we need to enforce what's already on the books, not create new laws, my response is you're absolutely right. We do need to enforce what's already on the books. This is what we need to do that. And three, when you're the party that says, or when you're sitting here saying, and we want to fight the deficit, it's like, well, this will fight the deficit. What you're doing will make the deficit worse. And you go, I don't care. It's like,
yeah.
This is bad.
And this is the thing is, I think you haven't
filled me with any kind of economic, with any confidence of your understanding of economics heading towards September with a very small margin of error on your side of the aisle and the promise that you'll never cross the aisle to ask Democrats to help you. And so it's like, okay, this will be a fun time and we all get to go along for the ride.
Yeah.
The drunk 100%. Carney, it's going to sound very bad. The drunk Carney is now running the Ferris wheel and we're all on it. Drunk Carney is now running the Ferris wheel.
Yeah, I don't feel too safe on the Ferris wheel either. All I'm saying is I think that it's more than one-sided coin, right? Like when you talk about solving the deficit, there's so many things that make us run up the deficit, such as
but we know my view is that the IRS has needed an overhaul for years. It's been underfunded for decades. And so if we're looking to fight tax fraud, if we're looking to fight wealthy people who just decide they aren't going to pay taxes and the IRS is going, we don't have the money or the manpower to actually go deal with it. It's like, okay, well, let's get you the money and the manpower to go deal with it.
Right. But what I'm trying to say is I think it's a more than one-sided coin, right? Because I do think, if you look at the bill that enforces, and I agree with you, I'll level with you on the fact that I do think the IRS does need funding, and I do think to a certain extent, right, because we need some ROI. If we're going to fund them with this much money, we need some sort of ROI on the back end. There are some rules enforced in the funding that I just don't agree with totally, right?
Sure.
You can level with me.
I'm not going to say it's a perfect
it is
law.
It is a little like, there are parts of it that are pretty obscene, and I agree. Like I said, part of reducing the deficit is making sure that you collect your taxes. You got
to collect your receipts, right?
You gotta get receipts. So, 100%, I think that's acceptable, but I also think government spending is also like way out of control. I think we can agree on that.
Sure.
I'm not saying that's the reason for the deficit. All I'm saying is like,
the government spending is the reason for the deficit.
I'm not saying.
I'll say that.
No, but I am saying like we could be, because we don't spend any money on the IRS. And like you said, like they're dealing with technology like from the early 2000s. Like their computers they still have like paper files of things, right?
Yeah,
which we all know, like
it's they're at a point where even if they wanted to investigate. If they want to investigate a billionaire who they don't know is doing anything wrong, but this is a guy who's got money in 10 different countries and he's got trusts and this and this. You need a lot of people to sit there and sift through the actual data and go, okay, all of this is above board. All of this is legal. Whereas then going like, hey man, he has this thing and it has all these things overseas, but then owns the house he lives in. And so he's claiming he doesn't own his house, but he doesn't owe taxes on A, B, or C. And it's like, well, hang on, no. He does. He owns it through intermediaries, and it takes investigation. And when but eventually what happens is you know that, well, this investigator, or there's 5 investigators that can investigate me, and they only have 10 hours a week each.
Yeah.
So if I can make it so that what it takes is more than 50 hours a week to figure out how I'm doing it, they'll never figure out what I'm doing.
Yeah.
Right.
And
So
the thing is
that
too,
whole,
like if the IRS spends, $1.2 million to collect $1 million of unpaid taxes, I'm like, that's
but
not
at the
worth
same
it.
time, if we go, we're not going to spend the money and let you keep your million in your pocket, I'd say
Yeah, I know.
that's not okay either.
I'm saying it's not worth it, but I also like at some point you got to make an example of people that have been getting away with stuff for too long.
Absolutely.
So
Absolutely.
maybe it's worth it. Like after, if someone else sees that this guy got busted, and it's like, okay, well, I'm not going to do this with this million that I have. Then it's like, okay, right? Maybe in the long run it's worth it. But
people who are cheating need to know they'll get hammered.
Yeah.
And at that point, you'll stop cheating.
Yeah.
And in theory, at that point, you then go, okay, we can not necessarily relax enforcement because you still have to do your enforcement.
Yeah.
But it's not like. It's like
it's
if
just
you're
like,
spending $1 million to get $5,000 back from from someone, I'd say that's not okay. But I would say like 1.2 million to enforce a $1 million cheat
collectible. Yeah.
Well, and the great thing is that I would say absolutely, because you can't have, if someone's willing to cheat for $1 million, that's what you caught them cheating, right? It's the What is it in Ozark, that one line in like the first or second episode?
Oh, dang, I don't know. I haven't seen Ozark.
Ozark, great. I know.
My old roommates loved
episode
it.
Where one of the guys talking to Marty is essentially saying like, what do you do when you catch an employee stealing from you? They swore they never did it before. I said, what do you do? And he's essentially, there's context to this that's different, but he says, do you believe? He goes, no, you fire them. It's not the first time they stole from you. It's the first time you caught them. And if I spend $1.2 million this year to enforce a $1 million collection, and then next year you don't cheat, so I don't have to spend 1.2, so you pay in the $1 million you owed. Well, now my 1.2 bought me $1 million plus $1 million minus inflation.
Yeah, exactly. So there's a lot of context to it, right? Because maybe it's a snowball effect.
Absolutely.
Where they do a bunch of these $1.2 million investigations only to collect $1 million. But in the back end, this person doesn't cheat again, right?
Absolutely. So, yeah, exactly. But on the back end, everyone else, all the other accountants and CPAs across the tax world go, hey, so this thing we have been doing, if they catch it, they fine it. And more importantly, the way the IRS fines is they go, what did you owe plus interest plus a penalty? So generally speaking, it isn't I spend 1.2 to collect 1.2.
One flat,
It's I might spend 1.2, but I collect what you owed plus interest for the amount of time you owed it, plus now a civil penalty or your criminal penalty, which usually covers other costs. So it's,
and like mentioned earlier, interest is only going up. So
it has not gotten cheaper to defraud the government. I can assure you of that.
No, exactly. Oh, and I forgot to mention, happy 1 year anniversary to LIBOR being retired.
Absolutely.
I don't know why I forgot to mention that.
Well, it's because it's retired, but it still has 3 more years before it's
dude. Oh my God, man. There's I'm like almost 100% sure there's 30-year models still based on LIBOR.
Oh no, I meant that they're
like floating plus LIBOR.
Oh yeah. Well, in the U.S. they've changed it, right? So they changed to the 30-day overnight rate.
Yeah.
Isn't it SOFR? The banks said they want. Yes, it is.
I don't know, dude.
It is.
LIBOR. The more I learn about LIBOR in my studies, the more I realize it's like
regulators were asleep at the wheel again. It's really easy to
absolutely 100%. But I also feel like there was a cushion. Like there was an actual central bank cushion on LIBOR. But it's like I don't know. I just feel like you could have done whatever you wanted to do with LIBOR. To get the repo, to get the overnight loan that you needed, or to get the term loan that you needed. So
and they often did.
Yeah, exactly. But it's an interbank rate, so you're doing it with each other, right? So it's a very incestual thing. But anyways, I just wanted to toast to LIBOR. I want to toast LIBOR, man.
It's gone.
It's great.
It's
RIP LIBOR.
Yeah,
we went out for LIBOR.
Merry Christmas.
Merry Christmas.
Merry
LIBOR.
New Year.
Yeah, Merry New Year to. Yeah, I know it happened on January 1st, but I'm you know,
Yeah, but
9
a year-
days late. It's not too bad.
But a year without's good.
Yeah, exactly.
You always,
But yeah,
you always hear that I got my chip. I'm a year clean.
Yeah, yeah, exactly. But yeah, I mean, that's the end of that's the end of LIBOR. Anyways, the IRS thing I think is really fascinating. You know, like the debt ceiling.
It's obviously it's a line in the sand for the Republicans in the House. It's not going to go anywhere.
It's talking about a line in the sand, dude.
Yeah, like
Across
this
the
is very
line.
much.
You do know.
It's like
It's quoting the Big
it's
Lebowski.
like this is. Yeah, no, I know you are, but it's very much they're trying to make a point, but it's a stupid point, and it goes against a lot of what they stand for, and so it's one of those things where you're just kind of like, guys, you stop. I need political stability for my markets to be as efficient as possible.
I mean,
and
like
you guys aren't helping.
Well, if you think about it too, like I think, you know, part of the reason why there was I think some sort of rally there, because there was a little bit of a rally last week, and I think part of that had to do with the fact that there was no Speaker of the House. Apparently, because I think it's not gridlock, but I think it's something similar, and I think the markets kind of appreciated that. And I think that's maybe, I don't know, was that you know?
I think the markets appreciate that the House will now be able to actually look at bills.
Yeah, but they don't like. Yeah, but they don't like.
They're like, okay,
but like the thing is about the markets is like they rather the laws just not change.
yeah,
Or at least,
I think
they're
that
more
they're happy-
bullish when they're more bullish when laws don't change because they know they can trade around. Okay, these are the laws, and they're not going to change.
yeah.
so
there's
we-
nothing
so
gonna-
we know-
things get too wild.
Yeah, so we can price in the risk politically.
Yeah,
you know,
I think they've finally. It'll take. I can't imagine that the 10th. And when you guys hear this will be the past. But my guess will be is the 10th will be a down day. Because we're recording on the 9th, like early hours of the 10th on my end. I think the Tuesday the 10th will be a down day, and it just for me they are seeing now what the rules package is. They're seeing how this new majority is going to behave in the House, what they're going to do. And it's going to give them this idea where they're going to start looking at, okay, when we deal with things in the future, it'll become, okay, how will this House respond to really, really bad days in the market? Will they bail us out? Will this House create things that they think would have a reasonable possibility of getting through the Senate, right? So it's essentially, how reasonable is this new thing? And that's kind of what we see every January. We see this kind of every January, every 2 years
after
when
every
a new
midterm,
house sits. When a new house sits, it goes, okay, what is this new house and what's its character? What's its policy? What is it stand? What's it doing? We'll see. And so, but I think it won't be good news necessarily as they watch kind of like, at the same time, they may see like this attempt to like this very short-sighted, not going to pass attempt to cancel tax enforcement. I think they'll look and they'll be like, maybe that's okay. Maybe we can benefit from not paying what we're necessarily supposed to because we're not worried about being investigated. But at the same time, there are also enough smart people will be sitting there looking at that going, well, that's like the kids in the backseat of the car trying to change their parents' mind while they're in the drive-through. You know?
Yeah, it's like, okay, yeah, we're very much committed to this.
No,
we're going in and out, guys.
We're here now.
Yeah.
Like we're in the car.
Yeah.
We got in the car, we drove here.
We're at the In-N-Out drive-through.
Yeah.
Love it or don't eat it.
We're not going to McDonald's so you can get on the play place right now. Like, you know what I mean? Where it's like
I miss that thing so
happening.
much. No, but it's really fascinating. I mean, I think there's a lot going on. I think, you know, one of the things that we'll table it for next week, but one of the things that I really want to talk about is like what's going on with the BRICS coalition. You know, so like the counterpart to OPEC, which is the, you know, BRICS stands for it's BRICS.
It used to be BRIC.
Yeah, South Africa joined recently, and then I know a lot of other countries have expressed interest to the South African president.
Shows some interest, yeah.
Yeah, a lot of countries have expressed interest in joining BRICS. So it's BRICS. It's Brazil, Russia, India, China, and South Africa.
And South Africa are the five.
Yeah.
And so they've created this very interesting emerging. It's not necessarily speaking emerging, but it is an emerging market.
Yeah, it's emerging and emerged markets.
Union.
But yeah, it's pretty fascinating. I think, you know, these guys are trying to, like, apparently they're trying to, you know, finagle a deal with OPEC.
It's a really interesting,
or not OPEC.
It's a really interesting combination of the second and third world, which is everyone talks about. It was very funny as everyone kind of talks about like, oh, the first world is the developed world, the second world is the developing world, and the third world is impoverished and not developed at all. That's actually not where those come from. These are actually political terms. So the first world is the Western world. So essentially NATO and NATO aligned. The second world was Soviet and Soviet aligned, right? and the third world was non-aligned, was independent, was doing its own thing.
Okay. Well,
those
that's
came
really
to take on
fascinating.
very different connotations in terms of economics. We could still use them and say this is an interesting combination of the second and the third world, because the second world obviously was mainly the Soviet Union, which was mainly Russia.
Yeah.
Which is really funny because most of the second world has now become part of the first world.
Yeah.
In that they left the Warsaw Pact and now most of it's in NATO or the EU. But then you've got the second world, so Russia, China to an extent, which despite everything, was kind of in the Soviet sphere of influence for a while, and then it stopped, but then they were both communist, and it's all fun. And then the third world, because India was the big third world country. They said, "Look, we're not. This ain't us. We're doing our own thing." And then you've got South Africa, which Brazil was also kind of. It was very independent. It's always been expected to be the powerhouse of South America.
Yeah. Isn't
and then
South
Africa, which
who kind of like ran South Africa? Was that Great Britain?
yeah. So
Is that why there's so many white people in South Africa?
It's not. It's yes. It was part of the British Empire,
Okay.
and then it remained, and then it was part of the Commonwealth of Nations, right? So the reason there are white people in South Africa is because the Dutch decided South Africa was a great place to go.
I'm sure it is.
And that's why you have Boers, B-O-E-R, so the Boer people.
Yeah.
And then the English decided they wanted South Africa for trade reasons. And when the English decided they wanted things, they just went and took them. That's just a fun history lesson for you. They took Scotland, Ireland, and Wales, and then told the locals, "You're all part of England now." And you'd say, or "You're all part of Britain now. This is British." And they
I've seen
obviously some of
Braveheart,
them disagreed. But yeah. So the British,
I listened to Jimi Hendrix. Don't worry.
Decided they wanted South Africa. Went to South Africa. The Boer Afrikaners, that's with a K and two A's, moved out of kind of the Cape Colony area and up into some other areas where they then found gold and diamonds.
That'll help. Yeah.
And the English went, "You found what now?"
That's our.
And
what?
that is now ours.
Yeah.
And it was maybe one of the first times that white people have done to other white people what colonial governments tend to do to any other to any minority population, is that when they have something that they want, which is, this is now our land. And, so England fought 2 wars with the South Africans about it, and took it, and then they, it's great.
Yeah, I mean
it's a fun story.
That's a really cool history lesson. I mean, it's
and then you get
real history. It's like
it's very entertaining because I was watching, because then you get things like you get apartheid, which not great,
not
at all. There's really and then that only died 30 years, not even 30 years ago. That was
really
early mid 90s. Yeah.
Wow. So that's, I didn't realize it was that recent.
Maybe 30 years ago this year.
Wow.
So it would have been, because 95. It's just weird the way you remember things. 95 Rugby World Cup was in South Africa. In a South Africa where Mandela was president and where things had occurred. So
that's the whole Invictus thing, right? Yeah,
absolutely. And so that's where I could say it must have been 92 or 93 when apartheid officially ended.
Yeah, it's weird. So that's why I want to talk about BRICS next week. Because we did the whole thing about the petrodollar last week. We kind of teased it, and I think this. I think we're seeing some things about everybody else wanted, like not everybody else, but a lot of different countries. I can name 3 off the top of my head right now that want to join the BRICS alliance, which I think would. Yeah. I hate to say it, we can.
I know the UAE is one of them.
Yeah, that's not good. Egypt, Argentina, right? So Turkey, which I don't. That's not anything at all. But
Turkey wouldn't. I don't see Turkey as a value add.
No, it's not.
Economically, at least.
No, yeah, that's the way you said it was perfect. So yeah, no, it's. I think it's. I think it's fascinating because I think if all these countries, and I don't really think Venezuela is a big value add either because their currency is also super weak, but they're sitting on a ton of oil.
They're sitting on a huge amount of oil and a huge amount of gold. So like I see Venezuela as if it can become politically stable. There's a lot of economic opportunity there.
Yeah, so I think it's really just like, these are the things that we should keep an eye on. We'll touch a little bit more on it next week, but we should keep an eye on this if we're concerned about the petrodollar, right? Which is, like in America, a strong petrodollar is good for our currency. Speaking of good for our currency, I think some of the things that you can do if you want to have that store of value, and this is potentially financial advice, but if you want to have that store of value, if you want to exchange your currency for a nice Drunkenomics hoodie, which, by the way, have confirmed from one of our very loyal listeners, Todd KKP. Dude, you are the man. Todd Zinn, you're the man.
It's a good look.
It's a good
I'll
look.
say that's a good
But
look.
he says, dude, the sweatshirts are insanely comfortable. From Todd, not paid. I'm just saying.
I'll take it.
I'm not bragging. I'm just saying.
Yeah, no, I find mine
I'm not
is
bragging, I'm
very
just saying.
soft. So
Yeah.
like, I like it.
Yeah, he got a white hoodie, which it's great. It looks fantastic on him. You get a white little Drunkenomics mug as well. I'm just saying, if you want to exchange your currency for something like this, I think it's a good value add.
I think it's an absolute value add.
That's all I'm saying.
It lets everyone know
exactly
what you're about. It lets everyone know who you are, and more importantly, look, it just frankly it tells me you don't have to steal eggs. It's like, look, these guys head on straight. There's not eggs in that pocket. Why would you need to put eggs in that pocket? This guy's he's good.
Yeah, he'll go to Waffle House. He'll buy the eggs, and he'll tip the waitress.
Absolutely, and he'll tip well.
Yeah, exactly.
He'll tip well. If I see if I'm out in the world and I see a woman in Drunkenomics garb, I'm gonna be like I once it was Glorbar.
Yeah, that's the one. That's the
Puerto
go.
Rico?
Yeah,
And it's like, all right, no. And
I think
was like, that's a great
California. Yeah, but yeah.
I was like, that's a great hat. I was like, that came out really, really well. And so it's like, okay, all right. Like, I suppose like if I did it, if I saw someone really in Drunkenomics stuff, I just walk over and start talking to them like I knew them.
Yeah.
And see if they said anything.
Yeah.
so
100%. If I ever see one of those,
because if I ever see
one of those in Phoenix, Arizona, I'm gonna.
Especially if I don't know them, if I have no idea who they are and I've never seen them before, I'm like, hey, I really like your hat. Where'd you get that?
Yeah.
And they're gonna be like, oh, it's this really cool podcast I listened to, and I'm gonna be like, all right, yeah, no, dude, okay, yeah, what's your name? Ah, sweet. And then if a random dude walks up to you and you're wearing Drunkenomics merch and says just talks to you a little bit, and it's like, oh, dude, what's your name? Or hey, listen next week, because I promise if I get away from there and you didn't say like, how do you know about it, or ask me anything about that, I'll be like, it was really good meeting you the other day.
Yeah.
Just know that was my brush with greatness, was meeting you, not your meeting me meeting you.
No, definitely.
That was my brush with greatness.
No, and seriously, if any Econoholics, if you guys are in Phoenix ever and you want to meet up for a drink, I'm more than happy to meet up. But anyways, our merch, drunkenomics.myspreadsshop.com. You can find a lot of great stuff there. Additionally, Patreon, patreon.com/drunkenomics. If you just want to leave a tip in the tip jar, I'd really appreciate it.
The tip of the jar, a little fiscal, fiscal stimulus, not financial, like a little monetary stimulus, not financial.
Yeah, nothing long term, but it helps pay for the Adobe subscription and
it helps keep
helps
me expand my collection of bitters. It keeps me tasting different
cocktails.
Tasting different
the
cocktails.
Fireball
It
cocktails
makes me willing to
look.
I'm just saying. It was a cider, so it was a chai cider that I added the Fireball. It worked. I'm telling you, it worked.
Okay. Listen, man. I believe in your whiskey tongue. I believe in your cocktail tongue.
It was not unpleasant.
Okay.
But yeah, so I found a way. But yeah, no. So same rule. If you're in Lincoln, Nebraska, or you find yourself in Nebraska, or you're gonna be anywhere near maybe where you think one of us is, feel free to give a shout out, and I will do what I can to pop out and meet you if I'm able.
Yeah, absolutely.
But yeah, if you drop any of that money on Patreon.com/Drunkenomics, you can help us keep the Liquor Cactus Stop the Ice Cabinet full. My lemon's fresh, my lime's squeezed.
Your lemon's fresh, yeah.
Absolutely. And it can just, I don't know, help us
play chestnut checkers, help us continue to fill and kill, and most importantly, it'll help us and all of you.
All of us. Yeah,
help all of us do, what's that one thing?
It's what we try to do. Stay tan. No.
No. It's so close.
Not BTCU. Hang on. Stay drunkenomical?
That's what it is. Cheers, my friend.
Cheers.